The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Chapman Tiger Technicians Hour, and wouldn't you know it, today would be the day that through my own fault, through no fault of TradeStation, which is one of the platforms I use, certainly the one that I show here all the time in the den, I am out. I don't, I'll only be able to get everything organized after the show. So I do not have any updated charts. But you know what? It doesn't really matter because we had the potential in the ChapmanWave for a peak F in the Dow. The peak F says, let me just go there, INDU. And the peak F says that at, right there. So the low today, I've got other charts, so let me go here, INDU. The low today is, in fact, 14,434. 14,434 right there. So I'm just going to take a line, and I'll draw it in. So we gap down and went to 14,344. Excuse me. That confirms a peak F in the daily chart. I've been talking about the weekly chart. So 14,434 takes you to about there, right? The low that we're looking at from last week was 14,395. So far today, we have not pierced that. So let me give you, I'm also flying a little blind because I need to get the updated charts. It's usually shown in the den. And just today, of course, it's not being shown. Is it being shown? No, it's not being shown. It'll be there, I'm sure, in a short while. One of those days. So let's go through this. You've got the TLT, which is the 20-year iShares Treasury Bond Fund, trading in leg D, a huge leg D. I'll go to that right now. It won't be updated. I'll just point to where it should be. It's up at 123.08 right now. The high so far today is 123. I think it was just higher. Yeah, 123.27. So what it does in the weekly chart is it says, I am now in leg A, above the previous high bar. I have, for the second week in a row, because there's no question that no matter how much of a reversal we have today, the bonds will not take out the 9-period exponential moving average of 117.70. I can say that almost emphatically. We have seen crazy things before, but that would be too much. I can see it pulling back possibly to 118.21, worst case basis, but not breaking. So this says, most importantly, in the bond area, that you've got to be very careful of the staying power of this rally that's been in place in various forms in the Dow, but certainly in all the indices since I would say November, but we've really not had a very sharp pullback at all since the breakout, certainly from January. So the breakout from December the 31st into January the 2nd, that was huge. And now what's happening is there's a trend line. And now this is where trend lines become important. This is I would call this, it's a channel line that was just sitting there, just like gaps just sit there and they don't do anything. And what's really important about this is that within the context of the uptrend, let me make that red for now. If the Dow was to break, actually I'm going to make that green because this is the traditional way that I do it. Make that green. It's called an inside track, and make this one red. There we go. See, I didn't need this before. It was absolutely irrelevant. Why would I need it when we were going up? I'm looking at all the up resistance points. In fact, what would be important right now is to go to this particular chart here. And let me show you. It's a little clearer. This is what I send my subscribers out every single morning. Very detailed report. There's just one little rectangle. There's still comments underneath that. That's number one. Number two is I do the diamonds, the 120-minute chart. I do the E-minis. I do so many charts every single day, and I give the ChapmanWave perspective. Now, what's really important, and this is what I was talking to Tom about yesterday in my interview with him, is that if we start to see the 9-period exponential moving average, this maroonish line, which was, in fact, great support, suddenly become resistance, then you're looking at a pullback that's going to test the up channel, where in this particular area, so that's today, this particular area says 14,410 to 14,400 is the area which support should come in, and underneath it, by tomorrow, by Monday that is, you'd be looking at 14,337. A crack of 14,337 not only takes out the body, which means that this is, you remember, look what I've done. This is what my subscribers have been anticipating. One of the reasons why we are short the Dow via the 200% short the DXD is because, and it's really my fault, I must have been very distracted this week. I've got so much going on trying to organize everything for San Francisco. If you're interested in looking at these charts, looking at what I consider to be the trends in terms of the indicators, the tools that I use that can give you intermediate, short-term, intermediate, and long-term perspectives, as well as the left side, right side, price, time match, etc. I'm giving a workshop presentation at the Marriott Marquis in San Francisco. I love San Francisco, and I haven't been for quite a while. It's right here, San Fran, free live workshop. It's called The Tide of the Market. And we absolutely need for you to please, if you have a chance, just send us an email saying you're going to be there, because we are filling up, and I need to tell them how many seats, because there's limited space. I hope that I can move to a bigger space. So far, everything's working out just fine. But please, if you have a chance, send us an email. Tell us that you'll be there. Not only that, I would love to meet you. We want to have name tags, have you write your name on a name tag. There's all that stuff that is, it's not just a presentation. I want to meet the folks out in San Francisco. Even if you're not a subscriber, I don't care. If you're a TFNN listener, I want to meet with you. I want to say hi. I want to know who you are. I want to be able to put the face with the name when you call in, whatever it is. So it's Wednesday. It's coming Wednesday between 6 o'clock and 8 o'clock in the evening. It's in the Buona. It's in the ballroom. I keep forgetting. I should remember that. It's in the ballroom, and it is. It'll say Tiger Technicians Hour. I just thought I'd make it really interesting. I can get everything in one comment. So please think about it, and I'm looking real forward to seeing you. And most importantly, Yerba Buena Ballroom. That's what it is, Yerba Buena Ballroom. And I'm looking forward to seeing you. I wanted to do this in the now, because I'm running a little bit blind here, in that I haven't got my charts up, but I do have the prices. I'm going to tell you this. I had a question. It was a very good question, just sent to me a short while ago. Is it possible the E-minis? Now, I don't think I can get the E-minis on this. No, I can't. I got it on other platforms. I just don't have it right here. The one that's being that's a focus right now. This particular window that you can see from TFNN. So let me do this. I'll run the numbers very soon. I'm sure that it will pop into the den. If anyone can remind Tom, if he can just update if he has a chance, just to update with the Bloomberg. I'd love to look at that so I can give numbers, and I can do some of it right now. Let's just say the Dow is INDU is trading at let me put it on this chart here. INDU, we'll go through numbers. Yeah, the Dow is down 103 at 1406.11. It hit 14,434. And the S&P SPX right now is down 12. Hey, that's not so bad. Oh, it hit exactly a very important moving average. So this is a nice bounce. And that had made a peak, I believe. Let me just go there. So you can see how I'm using this up channel. It's still in the up channel of the Dow. Let me just go here. I'll update as we go. So Dow made a peak F top. That's in the daily. That says, okay, you've got price and time. But if you pull back like this and you have a very strong bounce, the stronger the bounce, the greater the chances are that you're raising the base of support. Still early in the day, not even 2 hours. I don't want to get too carried away here. Yeah, we've got a couple of questions in the den. I'll get to them. Let me just finish this up now. So let me go to the S&P. I'll do it on my chart, but realize this is not updated. I did put that in just as a temporary thing. And the S&P, what's that moving average right there? That, I believe, is the 20-period moving average. Yeah, the 32-period moving average. 32-period moving average, the S&P has gone down to 1539. Oh, we were talking about that. 1539. 1540 is the 9-period, is the 32-period exponential moving average. And the low that you have to look at is 1538.57. A close below that spells trouble. It spells the kind of trouble that says, hey, if you're going to close below that, then the bar of most importance in the S&P will be the one that has 1525 as a low. Let's go to the Qs, 1, 2, 3. The Qs are sharply down, but they're actually at the high of the day. They're down 0.76, 67.35. Now, I need to just clarify something. Within the framework of what I've been looking at, a while back, I said that the pullback that we should get in the weekly chart, this first pullback from peak Ds in the S&P and many of the others and the diamonds, but not the Dow, that could be a single-digit percentage gain, and then there could be a stronger move to the upside, and then a really powerful move to the downside, double digits, 12, 15%, maybe even more. I'm not sure yet. Now, all of a sudden, I've been listening to all these people on CNBC and even Bloomberg TV talking about, gee, almost the same sort of thing. And I say to myself, wow, consensus, I don't like that. So I refrain from getting too carried away on the short side. I can't explain it. I don't know what it was. I might have been, as I say, distracted because I've just been so many things that I've been trying to do. But I must tell you that I've been looking at the back of my mind is running all the time. And the back of my mind is saying there is internal strength here and you cannot dismiss it. That, yes, if you got the IWM short on Wednesday morning, that would be fantastic. That's a great percentage gain. It's very weak. But there are certain signs of strength, like UTX has not quite completed its up move. I couldn't explain that. There was just an ambivalence about just diving in and going short. I'll be right back. 877-927-6648.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Basil Chapman, Tiger Technicians out. Now, I had a question in the den. It's a good question. We've got, let's see, we've got, Zip said, Basil, I have AZO 400 April put, thanks to Mitch in Boston. Could you give us your opinion? Thanks. You know, this is exactly what I've been referring to. I've drawn in right here. It's if you can see it, I've actually made up the bars of yesterday and today in AZO because, as I say, I'm offline. Should be back online early this afternoon. It's my problem, my fault. It was just an error that I'd made. So I've got charts all over the show here, and I show AZO right now down 4.77 at 397. It's come back sharply from yesterday's high, which was almost double top of the, let me just double check. Yesterday's high of AZO, which is AutoZone, being a spectacular winner on the upside. Yesterday's high was 402.09, and 2 days before that was 402.08. So that makes it E. Yeah, that's what I've got. So this is either peak F or it's recycled to a brand new B. I don't know if I can call it a recycle. The technicals, the stochastic is 77%. AZO is a symbol. And I've got it here. You don't go by this. It says 401.83. But the real issue is it's at 397. It's down 4 points from there. But it refuses to go down. Well, AutoZone car truck parts has had a spectacular move. Look at the monthly. Let's just do this. This is typical of what I'm looking at. I'm looking at stocks that there's just no way that any seasoned eye couldn't say, wow, that looks so overbought. It has to come down. But the more you look at it, the more you say, wait a minute. In all this time, it's held the 9-period moving average since it broke out back in November of 2009, somewhere at about 160, I think it was, 161.33. It has broken that line only once. That was in August of 2011. Twice, this is then a cluster between August of 2012, a year later, December of 2012, where it's the first time since it broke out that it closed under the 9-period exponential moving average. I'm going to be talking about this on Wednesday night. I'm going to be talking about the power of certain technicals that you can use. I need nothing here. I need to not look at a single thing below to say, that is an extraordinary indicator. Now comes the problem. Has it double topped at that 402-ish or whatever, 401 area, and making a cup formation in the monthly, because the MACD is quite weak and the stochastic, in fact, it's only at 75%, as I've got it right now. It's probably a tad lower because the price is lower. Is this going to double top, and by May, June, we're looking at it underneath 378, the 9-period exponential moving average? So now let's say, okay, those are the parameters, that if it closes above 405, 406, it's breaking out and it closes. Not just gets it, but closes. It's breaking out an upside. But if it breaks down underneath, as I said, right now it's at 397. If it starts to go under 392 to 390, I say, okay, I think we've got something here. But 386 is the 9-period exponential moving average in the weekly, and I've got an alternate count. I can't have an alternate count. I've got a count, and the count says this is leg C to the upside. I suppose I could call it an alternate count if I go all the way back to 2012, April of 2012, with the 399 that was hit twice at 399.10. And just say, you know what, this is an extension of that move, because that move, but it can't be. It was an instant restart. This is a brand new move. It's in leg C. So now let's see what you're doing. Now, I don't know. You've got the 400 put. That's much better. If you said to me you had the 395 or 390, I'd say, oh, that's a real problem, because this really could make a high-level consolidation. At this particular point, being down 5 points now, on a day like this, that's giving you proof, irrefutable proof, that yesterday it was up on the market being up, day before it was down, and the market being down. So it's moving with the market. And I would have to say to you that there's a really good chance you're going to make some money on this. But I'm also going to tell you, be prepared that if it stalls here for the next 3 days and it doesn't break the low of yesterday, which was, I don't know what the low of yesterday was. The low of yesterday was 394. I'm going to give it a little room. If it doesn't break 390, it's the day before that I really want. If it doesn't break 393 in the next 3 days, it could be a high-level consolidation. If it really powers through that, I'm going to recommend immediately take something off just to reward yourself and keep the rest, because the level that you're looking for now is 388.63. I'll be right back straight off these messages.
No matter where you listen to TFNN programming, we want you to know that you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right of the TFNN homepage. But if you don't have a mobile connection that keeps up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and call-in radio talk shows. TFNN is able to teach all levels of investors the technical skills needed for trading in today's marketplace. In order to get the best information available, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. So this is really weird. I do not have the VIX in front of me right now. I could get the VXX and all that. I want the VIX itself, the VIX index. And I asked in the Den. Oh, Den is a fantastic medium, folks. You can just ask any question within seconds, you get answers. So I said, what's the VIX? And it said 14.48. I said, what's the high? It was at 1565. Well, look at this. Here's the VIX index. The resistance is at 1589, the 200-period exponential moving average resistance. I would have thought with the kind of opening we had that we would have been up at the 1580s at the highs and maybe pull back a little bit now, but getting close back again. So this is really unusual. Let me explain something. I don't know what the high is on the short-term trading index today. Maybe someone can tell me what is the high on the TRIN. That'll be great. And it doesn't. You don't have to tell me what it is now. I just want to know what the high was. But that volatility index made a high on the 4th. That was yesterday at 1479. So it's gone to a leg E. And the previous high of significance was at 1540 on the 19th. Surely we should be higher than that. So either this is a very, you've got to be careful because this is saying, wow, between the trend yesterday still ignoring any pullbacks and even the day before only going to 1.80, I think it was. I want to see the trend up in the 3s and the 2.90s and the 3s. Oh, there it is. Okay, the trend is at 257 Schwab. we've got a high of 2.39. Someone says a high of 3.15. I love the way we get these different trend readings. I've noticed that before. I just stick with whatever system you have. Stick with that system. You'll get to know what is high and what is low. Got a high of 315. Okay, so 315 puts you into the highest category since the trend since. Oh, wow. Since the big break to 12.28 on the 21st of December, all year, we've not had a trend. 3.06 was the highest we had back on the 20th of February, and then the market went down. Well, it went down, but it did bounce before it made a low. The Dow made a low from 14,044 to 13,784. I must tell you, that's the kind of thing I've been looking at here. Now, let me just explain what I'm doing here. If you go to the IWM, so thank you, folks in the den, for all that information. If you go to the IWM, the IWM is trading right now at 91.26 towards the high of the session. It made a low today of 90.42. Where is 90.42? It's right there, 90.42. So I'll just draw that in so we know we're talking about apples to apples. 90.42. And it gapped down, right? So the low there. And it's trading right now at 91.22. 91.22. Okay. So that says to me that the amount of the decline in price from 94.96, the high of the 15th, 94.96, 94.96, to the level that we've seen right now, with everything that's going on of let's call it 4 points, of 4 points, is still putting it way above the low bar of 89.21 on the 1st of March. So trying to put this whole thing together with stochastic almost at the lows and the MACD still very negative, but starting to try to flatten out. Look at the weekly chart. Now it's not updated and it must be much lower, but the stochastic was at 93. So let's just say stochastic right now is at 91. It's still way above 80. You see, the big thing that I've been looking at here is that the daily is going to give us the information about the weekly. If the daily charts, and that's the IWM, I could go to the QQQs. QQQ, the low today is, let me just tap this in, QQQ, and the low today is 67.19. It opened at 67. I don't know how this one works. I'll tell you right now. It opens at 67.35, goes down to 67.19, has a high of 67.72, and right now it's at 67.59, trying to get at least creep back. So what did I say it was? 67. I'll type that in. So here we go. 67.19. 67.19 is right. That's deep. I mean, that is deep. 67.19. Whoa. That is very deep. That's all the way down to there. Okay, so I type this in. I'll just print this. Here we go. 67.19. And we'll put it right down there. So that is one ugly bar. You know what I'll do? Let's just make this like that. Thick, style, color, red. What am I looking at? I'm looking at weight, thick. There you go. So that's the kind of bar we're looking at. And, of course, it's way off the low, so that's going to be in fact, it looks more like this. Looks more like that. There, a little artistic expression there. So I made that one up. That says that 67 right there, 67.19, it has broken the up channel, not an up channel, but the uptrend support line. That's important because 68.8, somewhere around 68.05 is the 9-period exponential moving average, and it's been support. So I'm watching this and I'm saying, are we looking at the most of the damage being done now? Because you know what I like to talk about? I like to say that in a bull market, speed is your friend. In a bear market, speed is your friend. That would say that we've had a really ugly session today. We had an ugly session 2 days ago, but then yesterday was repairing the damage quite nicely in the Dow's case, not the IWM. So in this case, or the Qs, and in this particular instance, you've got Apple down only $5, 4.7. Oops, that was yesterday. Apple. Let me just go to Apple right now. I can't talk about that. I mustn't forget that I'm offline. Apple right now is at 423.91, down 381. Hey, that's not too bad. So we've got Apple breaking the low of 426. I said 427. That's interesting. No, 421. So 421 right down here. So Apple is going to try to retest 419, the round number low. Putting this together, what I'm saying is there's a chance that buying keeps coming in for a little bit, and we make lower lows and lower highs in a very volatile, choppy period. And then later next week, we either start to see a deeper decline. And one of the reasons why I say that's a possibility is because I am looking at stocks like, look at IBM. A stock that was on my list today to short, but I just, when I was flying a bit blind like that, I thought it's going to gap down. I don't want to buy it on the gap down. I'm going to follow it closely because 208 is the 9-period exponential moving average in the weekly chart. I'm only in leg C up in the monthly, but it certainly could pull back all the way to 202. So did I want to try to get in at 212 or 210 or 209 just for 4 or 5 points? I didn't really want to do that. Now, talking about the Apple double bottom potential and IBM's double top, because peak C says there's a real good chance at some point it should try to go above 215.66, 215.82, 215.90. It just missed that. So is this a peak C1, C2? I don't know. But the MACD and stochastic and IBM is still good. Apple's is terrible. I'm just talking about them, one being at the opposite side of the spectrum. So now this is what I wanted to do. Looking at these double bottoms or triple bottoms, what, like an Alcoa and stocks like that, what is going to precipitate some kind of a rally? Well, I'm looking at the GLD, and the GLD, let me just see what the GLD right now is. The GLD at this particular point is up, and it's up at 151.58, up $1.29. It made a low yesterday, and that low yesterday was 149.44. I thought I did all this. 149.44. And what I was looking at, remember the H pattern that I said can become an M pattern? And that's exactly what happened. I said that the bar that breaks below the left side low, this is the technique of the ChapmanWave H to M pattern. The bar that takes out the low eventually should also be the bar that bounces back. And if it doesn't bounce back, what you got to look for, and this is very important, it must happen within one bar after that. So this is the bar that says on the 120-minute chart, I haven't got it updated, of course, for today's action, but the 120-minute chart says, that is great action, because, not great, it's good action, because the 120-minute chart should see the stochastic pop over 20% today. That's what it's anticipating. The MACD is finally flattening out. And look at the histogram. You see those red lines? I now put the volume in much quieter. I put it background gray because I want to be able to see the histograms here clearly. They've been improving, in fact, for 4 sessions. I don't know about today. It'll be 5 sessions today. And that is very important. And that said to me that there could now be a bounce in the GLD to about the 152.99 area. That's the 9-period exponential moving average. But the rule of thumb is, unless you get a really powerful buy signal in the technicals, all it can do is bounce to the previous high bar, in this case 155.62. So for my subscribers, we actually have a trade in the gold area right now. I don't know if it's going to work out. But it could be a percentage gain. I say I don't know if it's going to work out because I need to see how we close today and how we open Monday. But there's a really good chance that gold, based on the weekly chart, let me show you this as well. Now, why? That's it. Okay, I've got it. Wait, I spent a bunch of time on these charts. I don't know if why it's... Oh, was it in the black chart? Let me just double check. GLD. No, it wasn't. It was in... No, it was in the black chart. Okay. The black background chart showing the pattern. No, it wasn't. I wonder if I lost that. Oh, I'd done so much work on this. Was it this one? Was it the IAU? Was it the GG? Oh, yeah, this is it. Okay. So it was one of the gold charts. But what I'm going to show you here is the gold. There it is. The gold contract, the weekly, made a left side, right side price time match, which says right here, that's an arch formation that went from, on the 18th, the week of the 18th of May at 1538.70, goes to a peak D. Remember the ChapmanWave, if you want to see those peak Ds, the SPY made a peak D. SPY made a peak D. Let me just double check. SPY made a peak D. The SPX made a peak E. So those letters in the ChapmanWave are really important. So what I'm looking at here is that the GCM contract, Now I just lost the one. Oh, I was doing GCJ. GCJ. Oh man. Oh, it was the weekly contract. Yep, I'm there. You can tell I'm a little distracted today. From the 1538 low of the week of the 18th of May, went to 1801.80, peak D, with a silent doji, 2 candles actually that were real good clues that it could be pulling back. It pulls back sharply and goes to where? It goes to a trough E, the exact price time date right here, bouncing off the diagonal. It didn't get to the major low, which was 1504. That's going to come later. But right now what we're looking at is there's a chance that the gold contract, and I don't have the updated gold contract right now, I do have the GLD at 151.61, sorry, at 151.61 up $1.32. And that says that there's a nice bounce, an inside bar. And that says that gold could try to go to the 16.50 area if this is going to succeed in being the daily left side high arch formation going all the way to the top. But the first level we have to look for is the candle of 1602.60, yep, on the 2nd of April, and the GLD, that's the candle right here. Is that a higher high? Yes, the candle of the 1st of 154.93. And then we'll see. And then I suspect we could be coming down. Maybe we even make a larger arch formation. I don't know. Maybe it fails. At this particular point, the closing price is going to be imperative to watch. And Monday into Tuesday at about 10 in the morning, maybe 12 o'clock in the morning on Tuesday, going to be really important for the GLD. Because if it breaks down, I suspect we're going to go to the 146 to 142 area as the moment we break 147. So I've made really tight stop. I don't want to even see any downside. I want to even see yesterday's low taken out of 194.44, because that'll be very negative. So I've covered some of that, and I don't know if I'm going to be able to get, is it the dollar I can get to DXY? DXY, oh, working offline, wrong one. Let me just go to dollar DXY. There you are. Yeah, so I'm going to be back in a moment. Basil Chapman, 877-927-6648. Probably not going to be able to help you too much. I'm going to try my best. But in the meantime, the Dow is coming back quite nicely. I'll be back. We'll talk about it.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, Basil Chapman here. The final segment of the show. Can't wait for this one to be over. I usually love these, but it's so frustrating not seeing the actual charts. I had a question today if I look at oil. Well, the USO is at 33.03, down 36 cents. This is the United States Oil Fund, and it tracks crude oil pretty well. Now, what I've got here are a number of patterns, but the most important are the arch formations that are forming. There's also a Gartley that might be forming. Most importantly, what it says is if the crude oil, if the USO takes out the gap low of 32.70 and the gap high of 32.59, so that 20 cents, if it takes out and breaks under 32.59 by Monday or Tuesday, that's going to say there's a really good chance that it's going to test the lows of 32.23 to 32.16, that area back in the beginning of March. If that breaks besides the monthly chart looking quite poor, not quite, actually the monthly chart looks very poor. Now this is oil. One of the reasons why the USO, now, I don't have time. There are so many patterns I wanted to talk about today. I wanted to go through, I prepared to go through the Investors Business Daily Stocks. Hopefully I'll be able to do that Monday. But most importantly, before we wrap up, look at this chart. Huge down move. It makes the H pattern successful so far because it's never taken out the low of 2274, that 2274 back from February of 2009. These patterns repeat over and over. It doesn't matter. Look at the GLD. See the GLD? Same kind of pattern. The H goes to an M, breaks to a low. Now it's going to try its best to rally back up to maybe make another arch formation, not being able to break out on the upside probably, but more likely going to make lower lows. That's what the monthly is saying as well. So when you get to the USO, the monthly chart is saying, hey, I have very limited upside, but I tell you something, I don't have limited downside. So I'm watching this real closely. Not only that, the candle that is formed this week is a candle that says, be careful, I'm closing under the 9-period exponential moving average. The stochastic's very weak. NACD is probably turning down today if it closes like this at 4 o'clock. Now, what's even more important is that if on the upside, so say I'm wrong, I believe it's going down. I'm wrong if gapping up is no good. If it bounces and it bounces over 3410, 33.99 is the 9-period exponential moving average. If it bounces over 30, I call it 3410 to 3440 and holds there for 2 out of 3 sessions, daily sessions, I'm wrong. I suspect it's going to actually just make lower lows, and that's the way it is. And that's the reason why I won't be able to get it. The XAL, all right, I've got up until March. I haven't got it recently. Let me see if I can get it here. XAL, no, I'm not getting it. That's not correct. So I'm sorry, I can't get it. That's why the airline index has been rallying so beautifully. And maybe it's time for a little bit of a pullback in those airlines. So before we wrap up, that helps. Before we wrap up, let me remind you, this coming Wednesday, and there is still time to do it, I'd love to see you. All these you don't have to be a subscriber. I want to see if you're a TFNN listener. If you know a little bit about my work, that's even better because we're going to talk about these different techniques. San Francisco, April the 10th, 6 o'clock to 10. Please just let us know. Just go to the front page, click on it, and just give us a couple of details so that we know we can put you down, put a chair. Now, the next program, Nico DeHaan, Paige Clark, folks, this is Healthy Living. It is a fabulous show, really. And I listened last week with Paige and her guest. It was really terrific. And it was really nice because she went off a little bit on her own, just to be able to get thoughts that maybe sometimes she doesn't have a chance to get with Nico. So that was really great. So, folks, please tune in. We've got programs all the way through the day. And I'm going to sign off right now. I'll have to call Trade Station. I want to be back online as soon as I can. This is very frustrating. So, folks, we've got a sell signal, which has gone to a sell mode in the daily. Sell mode doesn't mean you're going to keep going down. It says watch your support levels because this is a daily chart. We'll see where the weekly closes by the end of the day. We are short in my opening call. We'll see what happens. And I'll be back on Monday. Have a fantastic weekend. Don't forget to sign up. I want to see you Wednesday.